buyer beware, I would say, at this point. After the scale of this rally, when we think about the trajectory of earnings from here and what time frame we're going to need to even get back to where we were, we're looking at something in the first half of 2022 at this point. So I think the market's really getting ahead of itself. From here, it's going to be a grind.
And yet, the Tina mantra that was there at the top of the market, there is no alternative, is that still the same now? In fact, even more so now, given the fact that bonds and so-called safe havens have also rallied. So while Tina was true at the top of the market, is it still true now when we've come down aggressively and yet rallied aggressively from those lows?
I would say absolutely not. Actually, I think that there's actually great alternatives to just equities this time around. Unlike the previous period, credit markets are a good example of where there's really excellent value on offer, especially on a risk-adjusted basis. Spreads still very wide, and now behavior is going to be shifting much more towards repair of balance sheets, much more friendly towards credit versus shareholders. And so that's another fundamental support for you. And in the US, at least, you've also got Fed buying to help you as a backstop. So the actual total returns on offer in something like credit is a direct alternative to equities and relatively liquid as well. There are other areas in commodities I could go into as well. So I would actually think there's a lot of opportunity for investors to now diversify much more than was the case prior to the coronavirus crisis.